Okay, what's going on, guys?
What's going on?
Not much, not much.
Hey.
So, do you want to let me know what your question is? Preface the video.
So my question is like there is institutional structure point
Yeah,
on the left side, and
Yeah.
there is like
this
I'll
one.
use annotate to explain. Yeah. So there is
you-
like every time institutional structure point takes out the liquidity and then breaks the structure, right? And then
Yeah.
to the downside, the same thing, but over here there is no taking out the liquidity and it's still you marked it as institutional structural point. So why
Okay,
is that?
so yeah, okay. So you can also see here, like I didn't mark out liquidity here as well, right? I didn't mark out liquidity here as well. Versus, there's liquidity here and there's liquidity here. So we've had a buildup of liquidity. For me, when I'm looking at just substructure, I don't look at substructure lows and highs as liquidity in themselves, like by themselves, unless there's a buildup. Like, for example, this is like mitigations, built-up mitigations, or, I call them, equal lows, relative equal lows. If it's just one, like, for example, when you pull down, I'm not viewing this as liquidity, right? So let's say we're in an uptrend. I'm not viewing this as liquidity or this is liquidity. This is liquidity only because we've broken structure to the upside, right? So if we went like this, and then we pierce below this and break up, then I could see that as liquidity. But if we, let's go back a bit. If we did something like this, let's go here, down, up, down, and then we don't break this high, for example, and we just kind of go like this, or like, I'm not viewing this as a liquidity sweep, right? It would need to break some sort of structure to be to actually set, liquidity below the lows, right? So you can see here, this little minor pullback, I don't view that as liquidity. It's just substructure. It's expected to be a weak level, right? But the reason that these are ISPs, is because they're rebalancing price. Okay. So when we look at imbalance, like, what is imbalance? Okay. Do you guys know what imbalance is? Like, in theory?
Yeah, it's
Yep.
it's the gap that is not filled.
Yeah. And
Like,
what's
people who were trying to enter the market did not enter.
exactly?
something like
So yeah, it's 100% right. So if we have, for example, like imbalance, buy side imbalance, right? So let's say that this is one big candle. Then in here are a ton of unfulfilled orders, and a bunch of unfulfilled orders is liquidity. Okay. So I think I touched up on this in the live, the one-on-one, but when there's imbalance, imagine like a paint roller. Okay. So have you ever painted before? Like with a roller?
No. I did
Okay.
not.
So if you put paint on a roller and then you roll it up the wall, right? You're not going to cover the whole wall. You're going to have gaps in the wall, right? So let's imagine you start at the bottom of the wall and then you go to the top of the wall and you do one stroke above really quickly. You're going to have these gaps of old paint underneath and new paint on top. So then you'd have to come back and you'd have to go over it again. And when you go over it again, it fills up the wall, right? So that's kind of the same way that imbalance works, is if we pass through it too quickly, there are residual orders that need to be filled. And that's a form of liquidity, right? All that liquidity is a ton of orders in the market, right? So when we come back and rebalance that counts as an area of liquidity. So we can call that an ISP. And then we have that reaction out of it. So in theory, that's how it works. But in practice, this is what it looks like. Right? So something like this. So you have, your high, your low, your high. This is not really substructure, right? But we have this big imbalance in this candle. So when we push back into this area of liquidity and then push out, then we have a new ISP. And then when we come back into this region, let's do this. So we push in, push out, come back into that FEG, which is a form of liquidity, push up. We can come back in here and expect that this area will hold, because we assume that institutions are involved at this region, right? Because their institutions are always going from area of liquidity to area of liquidity, right? So we assume that this will hold basically up until we hit like that higher time frame. I call it the draw on liquidity. the higher time frame area of liquidity, which will then, you know, potentially shift bias. But until we hit that, then these areas should hold. Does that make sense?
Yeah, yeah. There is one more question I have to ask. If you can put back the
Oh yeah.
structure picture.
Here we go.
Okay. Also, what I noticed is like here we sweep the liquidity and then we break the structure, right? And then same thing happened here. Like, I mean, you don't call this as liquidity, but let's say similar.
Yeah.
And then like right here, I see this as a institutional structure point, right? Because again, it broke some kind of, I mean, took some liquidity and then again broke the structure above. So you mark this as a substructure and not as a institutional structure point.
So you're talking about this one up here?
Yeah.
Yeah. So actually that technically is an institutional structure point. The only reason that it's not is because, well, in my mind, I know to prioritize bias. So when we're looking at an uptrend, like the expectation is up, like I'm really only focusing on the ISPs on the bottom. And then when we have that shift, then you can see that I'm really only focusing on the ISPs on the top. Oops. But if you, I'm not sure if I mentioned this in the video, correct me if I'm wrong, but this is a long-term structure point, right? Or swing structure point.
Yeah.
And in the video, did I mention that one way to classify swing structure points is if you have an ISP, a higher ISP on each side?
Okay.
Okay, so I'm not sure if I mentioned that. It's not the most important information, but it is necessary. It can give you extra confluences of like where your swing structure is, right? So here we have an ISP on the right, a higher ISP on the left, and a lower one in the middle. That gives us a swing point. Up here as well, we would have a higher, a high one in the middle, a lower one on the left, on the right, and a lower one on the left, right? So this can be classified as an ISP. It's just that for the sake of building bias, I always prioritize, you know, what the expectation is. Otherwise, you're going to look at these and try and trade from them and just get burned.
Okay.
But you're technically
Got it
not
now.
wrong. You're technically not wrong.
Okay.
Yeah.
Yeah, I understand what you want to say, but I like usually mark that as a institutional structure. So I just asked that, but that's really smart because you don't get confused
Yeah,
with your bias, right?
exactly. That's why I didn't want to put it in there, but you're not wrong at all. So because I don't mark up my charts with all these dots, right? I'm doing this all in my head. The only one that I actually put on is ISPs because it helps me to keep track of, you know, my bias, but everything else I just do in my head, right? So this in my head, I know is an ISP. So I know that this is a long-term structure point or a swing structure point, but for the sake of keeping my bias clear, I don't want to start putting ISPs where I know I shouldn't trade from.
Okay.
Yeah.
I have to start doing that because sometimes it gets me confused with
Yeah, 100%.
with the bias.
100%. You always got to stick because your bias is built from, you know, your higher time frame, your lower time frame, and liquidity. So and order flow, right? But ISPs are meant to keep track of order flow and liquidity, right? Because that's what it's come from. It's come from an area of liquidity, and that's institutional order flow, right? If we start putting ISPs everywhere, we know that, okay, sure, they may have entered like some short-term positions to push here, but we don't want to be trading from here. We're going to get burned. You're going to get smoked, you know, everywhere you're going to get smoked, right? Over here, you'll get smoked. Yeah.
Okay. Yeah.
I mean, this one here is a little bit unique because yes, we have the SMB we push down, but we're coming into like a potentially unmitigated ISP, and you can take like a scalp up into that next area. But this is stuff we'll all talk about when we get into the trading model anyways. But for right now, we're focusing on, you know, structure and bias, right?
Yeah.
Yeah.
Okay. That's what I wanted to ask. That's what interested me more.
Does that clear it up or?
Yeah. One more thing. Here I see like, let's say this point and this point, let's say we mark it as an institutional market structure.
Yeah, sure.
But like here, over here, do you, I mean, how I view the structure, usually how I marked it up is like this, like I turn around, like from here to here. But
Hmm.
here, like I don't see let's say this sweep and then just go down and break the structure. That's how I would view the market structure. But you are not marking that as a market structure from, like, let's say, point from here to here.
Yeah.
So does it I mean that's how I'm viewing the structure, but like I see that you are not viewing this, so it doesn't have to pick up some kind of liquidity over here and then put it down and then break it up, right?
No, no.
To
So,
view it as a market structure, institutional market structure.
so this is the current leg, right? So at the start, this is the leg, right? So we have that SMB. This is the leg. This becomes the new high of the leg. So what we're looking for is the next sweep that breaks this high, okay? And that's what we call the breaker structure. So we get that liquidity sweep that breaks the high, and then that extends institutional structure to the next area, okay? Like so, right?
Okay.
Now, if I'll draw this out too. If, let me just draw this out real quick. Okay, something like this. Okay. So
Okay.
if, you know, you have the ISP, so you have your SMB here. Let's mark this out. Yeah, SMB. So if we push up like this, and then we don't get that other sweep and we just continue, then this whole thing becomes your current institutional leg, and we're waiting for that next sweep, right? So if we push down, swept liquidity here, and then broke up, then this becomes your next institutional structure point, because we're following the most recent ISP. If there's no ISP that's formed, then we assume that it's from the same leg as the last one.
Okay. Okay. And what if, let's say, this thing come here, mitigates like over here, and then breaks the structure? Do you view this as a new institutional market point?
Usually, if something like that happens, so that's actually a really good question. But usually, if something like that happens, what I like to do is kind of bounce between my timeframes to get a better idea. Because if I ever have to feel like I'm guessing, then I wait, right? So,
Mm-hmm.
for example, you're saying like if we came into that last point of inducement in this range, right?
Yeah.
Yeah.
Oh,
So
clear.
for
Like
me, I'd hop around. Let's assume that this was like my medium time frames, you know, 1 hour, 4 hour, maybe 15-minute. Then I would hop around those time frames, try and get a clearer picture. And then I would judge based on other factors whether, you know, I want to try and frame a trade idea off of that, or if I just want to sit back and wait.
Oh, okay.
So it's really
Okay. Because
that's one of those things that you just have to kind of use your better judgment. But generally, if it's not clear, it's better to just wait.
like so many times it happened to me, like something like this happened and then market comes here, and sometimes it happens this, and sometimes it's like just induce the people who looks for bias and then drops down and breaks the structure, and then we change the whole point of
Yeah,
view.
exactly. So
That's why I'm
that's
asking.
yeah, 100%. And that's why if I wouldn't assume that this is an ISP, because our job as, you know, traders with this plan is to predict when the ISP is forming and trade the ISP. You either trade the formation of the ISP, which is in an area of liquidity, or a continuation of it, right? So I wouldn't assume that there's a trade in here until we actually come down and take all that liquidity out, right?
Okay.
This is also paired with things like imbalance and you know, displacement and stuff like that, right? So let's say that there was imbalance in here and we had like an area of demand here, right? Then I would have, you know, I would never be trading from here, right? Because I understand that there's still residual orders that need to be rebalanced and we have unmitigated demand, right? So you have to pair your confluences as well to build more context around something like that.
Yeah.
Right?
I'm guessing we're gonna learn more when we get deep into the mentorship. I mean,
Yeah,
into the
100%. Like
lessons.
there's
So
so
we're gonna
much.
see.
Yeah, sorry, I was cutting you off there. What were you saying?
I'm saying like we're gonna learn a lot of through mentorship, I'm guessing. So we'll know when to take the trade and when to not take the trade.
Yeah, 100%. I was throwing structure here at the start because I personally think it's the hardest one to grasp. The rest of the mentorship is pretty easy. The rest of the my trading model is really simple, from, you know, everything down to even the entry is super simple, like 4-step process. It's really just structure and bias building that's the core of it, which is the hardest one to grasp. But, you know, with due time, we'll get all of it.
Nice.
All right, man. Is there anything else?
No, that's it. That's it. If I
Anyone
remember
else?
anything, I'll ask you.
Awesome. Yeah, please do. And if you notice anything like me making mistakes or something like that with you know, how I'm teaching, just call me out on it. Hold me accountable, you know? I'll hold you guys accountable.
Sure thing. Because
Alright.
like I'm trading similar strategy as yours, but you're more experienced than me. So like I just want to learn everything and get more into details. to
Yeah,
be
no,
like better
100%,
trader.
man.
Yeah.
I know if I put everything out today, like if I just started uploading all of my videos right now, that you guys, and I know this because I was that guy, are just gonna go through everything in like 6 hours and not have time to let it sit, right? Because you get excited. And
Or
you know,
skip
I've
to the
done that for so
entry.
long.
Or skip to the entry
Bro.
point.
Yeah, you're gonna skip to the entry model. Yeah, exactly.
Yeah.
Bro, you
Leave
are
everything behind.
100% right.
Yeah, exactly. Right. So I want to avoid that. And I know that a lot of people learn at different paces, right? So I kind of want, at least for this portion of it, for everybody to be at the same rate. So, and also I'm not answering 300 different questions about 300 different segments of the trading plan, right?
Yeah.
So
I mean, you uploaded 3 videos, and I just like when I woke up, I just sit in front of my
yeah,
laptop and
exactly.
watched it all, man.
Exactly. Now imagine there
That's
was
it.
like 10. You'd be up till 2 a.m., bro.
Yeah, I will watch it all, man.
Yeah, so we'll get through it with due time. It's going to be a little bit slower at the start for that reason, but it's, you know, we're doing that with a good intention, right?
Yeah.
Yeah, so
And
just
can
bear
you
with
tell
me.
me like your plan for like this week and sessions, because I'll be traveling on Sunday, I think. So I don't know. I think you mentioned something yesterday that we will have session on Sunday or something like that. I'm not
Yeah,
sure.
yeah. So the Sunday session we're gonna have a session every Sunday, right? We're gonna have Monday, Wednesday,
Okay.
Friday, and Sunday. The Sunday session is most of the time will just be a quick little market forecast and stuff unrelated to trading, like, well, not unrelated, but like psychology or like goal setting, that kind of stuff, right?
Mm-hmm. And the
Checking how
timing,
everyone's
is it the
progressing.
same timing or?
Yeah, I might have to do the same time. Like I would rather do the evening when markets open, but I mean, I understand that a lot of people aren't in the same time zone, so probably the same time.
Yeah.
Yeah. I'm
Okay.
not too
Okay.
strict on the Sunday one because it's not the most important session, but the other ones, Wednesday, Monday, and Friday, are all going to be the same time.
And you're gonna upload every session, right?
Yeah, everything that I record, I'll upload as long as there's nothing private shared, like in a one-on-one.
Okay. Okay.
Yeah.
Because I'll probably gonna miss that session on Sunday because I'm traveling. So I'll watch it probably later when it's uploaded.
Yeah, no problem, man. All right.
Okay. And that's it from me.
All right, brother. All right, thanks, guys.
Yeah, thank you.
No problem.
Have a
Thank
good
you.
day and peace.
I'll upload this one.
Same
See you
guys.
guys.
Same guys.
Bye-bye.
Let's
Peace out.
follow the chat. Bye.
Bye-bye.
Bye.